In this video, I'm gonna be sharing with you guys how you're gonna begin your journey as a trader. And my perspective with this is I'm gonna be teaching you in a way that I wish someone would have taught me 6.5 years ago when I first got into this industry. With that being said, I want you to think about a New York skyline, right? Or the skyline in Miami. You know those very big buildings, those beautiful skyscrapers? You ever wonder how they ever stand so tall and so strong and they can withstand anything? The reason for that is that they have a very deep foundation. Okay, so when they're building these buildings, the construction workers have to dig a massive hole in the ground so that they can actually withstand any storm and any condition that they're faced with. And I want you to view yourself as that, is that you're a very tall skyscraper. And for you to withstand anything, you have to dig a very deep foundation. So your foundation as a trader is going to begin with these two major things, okay? I am not an artist. The first two things you're going to learn is you're going to learn how to read price action, and then you're going to learn how to read market structure. Without these two things, I do not give a fuck what anyone says. Trading will not work for you. Okay? And I can tell you from experience, because when I got into trading, it took me about 3.5 years to understand market structure was. And that pissed me off when I finally learned exactly what it is. So with you, I'm not gonna allow that to happen to you, to go through the same shit I did. Because without market structure, my entire building kept collapsing. It didn't matter what strategy I had. It didn't matter what asset I traded. My building always fell. So for this to work out for you, you have to learn price action and you have to learn market structure so that we can begin to learn my strategy, my risk management protocols, how I get funded accounts, how I've gotten payouts, how I'm able to manage multiple live accounts, and how I'm able to manage to live the life that I'm living today. But without these two things, this cannot happen, okay? So with that being said, let's just hop on a computer and let's get this shit started. All right, now what I want you to do is go on your Safari or web browser and go to tradingview.com. What I want you to do is click Get Started and go ahead and sign up for the essential free trial for 30 days. Usually 9 times out of 10, they're gonna give you some sort of like discount for annual, and it's always 100% worth it. I think I pay about like $100 a year for this software, and it's the best I've used so far in this industry, okay? Once you get that settled, go ahead and go to More, go to downloads and get the desktop app, okay? I have Mac, so I'm obviously gonna get the Mac, but get whatever computer you have to use. Once you get downloaded, let's get into the next session. Now that you have TradingView all installed, it should look something kind of like this, right? You're gonna see a bunch of these little candlesticks on the screen. Oh la la, right? It can be a lot at first, but this is exactly what we're gonna be going over. Because again, remember, like I mentioned, your whole perspective moving forward is I want you to view yourself like a very tall building. And again, for you to build a very tall building, you have to dig a very deep foundation. Okay? And your foundation is going to come from you understanding price action, which was the candlesticks that you are seeing on the screen, and market structure. And market structure is basically the story that's being told when all those candlesticks are put together. And your job as a trader is to literally understand the story that is being told. Because like any good story, there's going to be like your hero's arc. Like when you go to the movies, we all love seeing the poor guy that's like studying for his test. He has a hot girlfriend. He wants to work for a major firm. You know, he studies all day long, works like 2 part-time jobs. He cooks for it when he can, but then he tries out for the firm. And then he gets the job. Oh my God, then this is the peak, right? All is super amazing. And the next thing you know, his boss finds out that his girlfriend's hot. He hooks up with her. Then the guy finds out that his girlfriend's cheating on him with his boss, and it's all crazy. It's all crazy shit. You feel me? And stocks are literally the same way. And the idea is that you want to be able to understand the general gist of the story. And that's what market structure is. And like I said, for me, market structure, it took me 3.5 years without ever really truly understanding what it really was. And that's why in this video, I want to make sure you understand this thoroughly, okay? But first, let's get into price action. So price action is pretty much like the little candlesticks you were seeing on the screen earlier, right? And the thing about these candlesticks is that what really differentiates them is pretty much the open and the close. So with this bullish candlestick, the open is down here and the close is up here. If the close is higher than the open, then the candle's always going to close green, essentially, right? So let's say hypothetically, for example, if the candle opens at $2, but it ends up closing at $4, that means we had a gain of what? 2 points. So that means buyers were in control and buyers pretty much won the fight. They're telling the story right now, and vice versa. Here we have a bearish candlestick. The only difference here is that the close is lower than the open. So let's say, for example, this candle opened at 4, but then it closed at 2. That means we have minus 2 points on the stock, right? So that means what? The sellers were in control and sellers had the most conviction, okay? It's pretty simple, it's very self-explanatory, okay? But that is pretty much price action in a nutshell. And another thing I'm going to point out is that there's different kinds of candlesticks, okay? As you can tell, like there's going to be ones that are much bigger and ones that are much smaller. And the ones that I really want to go over are the ones that can be a bit deceiving. So in this case here, you might see some candlesticks that are going to be like this, right? It's going to look green because the close is above the open. And a lot of the times people get confused saying that, oh, isn't this a bullish candlestick because it's green, right? The close is above the open. Not necessarily. The reason why this does not count is because of the wick. These little sticks here, these are called wicks, all right? These are pretty much what's left over from the candlestick as they are developing. And what I mean by that is in real time when you're viewing trades forming, at one point this candle here was nice and full body, right? It looks something like this for a short period of time, but then sellers came and they pushed this candle down. Looks something like that, right? And vice versa. If you look at the candlestick here to your right, at one point this candlestick here was nice and red, it was nice and full, kind of looks something like this. And then buyers came and they pushed it up, okay? So coming back to this example right here is that this candlestick itself, yes, it's bullish, but this is actually a seller's candlestick, and in the trading world, we call this like an inverted hammer, right? Because if you look at it, it looks like an upside down hammer. But what makes this what it is the fact that, again, the wick is a lot bigger than the body, okay? And in this example, the body is much smaller, but look at where it's positioned. It's positioned at the bottom side of the candlestick. So what this means is that at one point, this candlestick was nice and strong, kind of like this, okay? But sellers came and pushed price down, showcasing that sellers were in control and sellers inevitably won that fight, okay? Let's look at another example. With the seller's candlestick, sometimes you're gonna see something just like this. It's gonna look like a hammer, kind of something like that. Obviously, the close is going to be lower than the open, and that's why it'll be red. But just like the example before, is that look at the size of the wick, right? The size of the wick is a lot bigger than the body of the candle. So again, at one point, this candlestick looked very full at one point, just like this, but then buyers came and pushed price up. So in this example, this is a hammer candle, but buyers were in control because look at the size of the wick. It looked something just like that, okay? That is price action in a nutshell. And now we gotta go into market structure. With the first example, here you're gonna see that we have price action labeled out on the screen. You're gonna see that there's a bunch of candlesticks that are relatively big, but you're also gonna see a lot of candlesticks that are relatively small. And this could be very confusing because I know for me, myself, I used to get super locked in on all these itty bitty little candlesticks and what this is really supposed to mean. But the whole idea is I want you to take your eyes and see where they're going. So in this example, your eyes are gonna be going from this bottom left of the corner of the screen to the very top right of the screen, just like that, okay? So what this means is that the candlesticks are pretty much showcasing that we are in a uptrend, okay? And in an uptrend, there's gonna be a series of what they call higher highs. I'm gonna put HH and higher lows. And it looks something like this. So right here we have a higher high, and then we had a higher high, LOL, and then we had a higher low, and then you have another higher high, and then you have another higher low here, and then you have a higher high. We have a higher low somewhat down here, and then we have a set of highs, okay? And the best way to kind of look at this is that I want you to think about running, right? I don't know if you're a runner, if you know someone that does marathons, but a lot of times, I think marathons like what, 26 miles, right? Your average runner is not going to sprint. Oh God, it's terrible. He's not gonna sprint 26 miles straight, right? He's not gonna go crazy, go a full Ironman, like full blazing, okay? So runners, kind of just like stocks, they will run fast and then they'll take a break. They'll run really fast and then they'll take a break. They'll run really fast again and then they'll take a break. They'll run really fast and take a break, and then they get to the finish line. And stocks move the same way. So in this example here, as you can see, price made a strong move up, and then it took a break, made a strong move up, took another little break, made a strong move up, took a weird little break here, it had another strong move up, and then another little break, okay? But what made this an uptrend, as you can see, are these massive candlesticks up here. These strong bullish candlesticks is what really drove price in a direction, is what helped you drove your eyes from this corner of the screen to the very top, okay? And this is pretty much what we're paying attention to, is these guys up here, okay? But it's very important for you to understand where the higher highs and higher lows are going to be. So if we start over here from this side of the screen, let's just get rid of all this for just a moment. I want you to pay attention what's going on here, okay? If we start from here, these candlesticks drove price higher and they went above this swing point up here, creating another higher high. So once we had a strong move up, right, the runner had a strong move, he had to what? Take a break. So he took a small break, and notice how the candles here are very, very small. So this showcased that we were taking a break and we created a higher low. We took a break here, we caught our breath, and now we're going for another strong move up, creating another higher high. This is a higher high because this high is above this higher high, okay? And in the trading world, we're gonna call this break of structure, BOS for short, okay? So just remember that for later. So as we create this higher high, we took another break, and we know that because look at the size of the candlesticks. They're very, very small, okay? So we took a little break, we caught our breath, made a little higher low, and now look what happened. We had a very strong move up, okay? We created another little break of structure, and then we created another set of what? Higher highs up here. We created another set of higher highs, candlesticks got really small, we took a breath, create a higher low, and now we have a set of highs, okay? The thing is that market structure like this in an uptrend is never going to be pretty, right? It's never going to be perfect, but it's important for you to understand the idea behind it, okay? So I just always want you to remember to think about it like a runner. A runner is not gonna go 26 miles straight. He's gonna go for a sprint, take a break, sprint, take a break, sprint, take a break. So stocks in this example, we never go straight up or straight down like a lot of people tend to think. We have a strong move up, take a break, strong move up, take a break, strong move up. And again, this is called an uptrend, okay? So that is example number one. Let's go into the next example. Let's go see what a downtrend is. It's gonna be something just like this, okay? So like I said, this right here is called a downtrend. Wow, I cannot write. Okay, this is a downtrend because we have a series of lower lows and lower highs. So again, just like the runner, except he's going down the hill, okay? So what's gonna make this a downtrend is the fact that we have a nice, who can call this out for me, a break of structure. Why is this a break of structure? Because all these momentum sticks, all these bearish candlesticks broke below all these lows, okay? Once they broke all these lows, we have a lower low, right? Because remember, this was the momentum on our way down, and look at the size of the candlesticks. They're nice and small, so we took a break here, and then we had our lower high, okay? This is a lower high because it's above this lower low, and now we have what? More gigantic momentum bearish candlesticks that broke below these lows, okay? That created a lower low, okay? Now we're taking a break because again, look at the size of the candlesticks. They're nice and small. And we're creating a lower high up here, okay? This is a lower high because it's above this lower low, but more importantly, it's below this lower high. And now we're going for another leg down because look at the size of the candlesticks. They're nice and big, right? Big momentum bearish candlesticks, create another lower low here. This is a lower low because it broke below these lows, okay? And we have another lower high because again, the candlesticks are nice and small. And now here it gets interesting because this lower high broke below these lows, created a lower low here. But the thing is that sellers got exhausted right around here because this candlestick here could not break below these lows. So now we have lows. Okay, so as you can see, it's like a never-ending journey of like creating a set of higher highs, higher lows, higher highs, higher lows, and then it all changes when we break structure and creating a lower low, lower high, lower low, lower high, lower low. Okay, and sometimes we have this thing called a range, where sometimes prices doesn't break a high or low, it just kind of goes sideways, and then it just starts all over again. Because this is what's happening here in this example. We create a set of lows because, again, these lows could not break these lower lows. Okay, so this is a bit of a range until the trend starts again up here, where these highs were broken. That was supposed to be the previous lower highs. Okay, so we have a break of structure, creating a set of higher highs, higher lows, some highs, because it gets weird. And then again with some, and then the journey can start here all over again, where a break of structure, a lower low, lower high, and vice versa. Okay, and that's pretty much the basis of price action and market structure, is being able to understand that. Okay, what I want you to do is I want you to do this as homework. Go on the 1 hour chart like you see here, like I'm doing. This is the easiest way to do it. And I want you to type in NNQ. So this is the NASDAQ futures, but it's traded from the micro side, but I'll get more into depth about that later. Your homework is I want you to label out this to the best of your ability, okay? Write lower lows, lower highs, lower lows, and lower highs, all this stuff. And I want you to take a screenshot, right? If you have a Mac, I think it's like Command Shift F4, and I want you to take a screenshot just like this. I want you to follow me on Instagram. The link will be somewhere in the description below. And I want you to send it to me so I know that you watched the whole video and that you pretty much pay attention the whole way through. So with that being said, I hope you guys found this very valuable. I hope you learned something new today. Please go ahead, like, subscribe, and I hope to see you guys soon for my next video.